Welcome to this week's Cattle Call. I'm Susan Littlefield on the Rural Radio Network. First and foremost, happy Thanksgiving. I saw an interesting tweet that went out from a cattle organization, and Brad Kooima, by the way, is joining me from Kooima Kooima Varilek out of Sioux Center, Iowa. And Brad has said, note, did you forget to take the turkey out? It's still frozen. That's okay. Eat beef. And I thought of you right away.
Yeah, that's good. It's just too bad that first Thanksgiving there wasn't a big fat steer around that they could have killed that instead, right?
Yeah. Well, and that kind of leads into the fact that this has been, I jokingly said before we started this program, time to back up the manure spreader, because there's a lot of issues going on with this trade this week, and no surprise, it's Thanksgiving week. Can we put some of the blame on that?
Well, there's certainly, thanks for having me on, by the way, Susan, and happy Thanksgiving to you and everyone else. It wouldn't be the first time that the market struggles this time of year, for sure. I mean, this would be a seasonal time where typically you're getting toward the end of that big northern calf crop. You've got a little bit of a slug in the demand because, yes, people do eat turkey, and I will too tomorrow. And the whole industry seems to gear around that. But now don't forget that all this stuff is also not a one day at a time situation. So if you're Costco or if you're Fairway or whatever, and you're going to start to prepare for, okay, what's next? Well, they're not going to feature turkey next week. They're going to shift that transition now next week, right? And I'm hearing this morning, in fact, about a little better interest here already in the middles. And the middles, when I say that, I mean that's the high price beef, that's the ribeyes, the loins, the strips, the more traditional Christmas fare, Thanksgiving, the office party, right? All of that. So I think, any old timer around here that's listening, they'll remember that seasonally you get a week or so after Thanksgiving. Wouldn't be the first time the market's turned. Obviously, you have to be careful with seasonals because they've been a little unreliable, because of some black swan stuff. But the market seems to be in a little better place that way, supply chain wise and different things, unless another war breaks out here before we get there. But so I don't know. I think we muddle along here, get through this Thanksgiving week, get these packers where they got to kill full again and eat a few more cattle. And I'm hearing a little bit too that there's an interest in Saturday kill by a couple of the majors and going to kill this Saturday and next Saturday for a couple of them. So that would make me a little encouraged that they wouldn't do that if they didn't have meat sold and or weren't making money in the actual procurement and the processing, right? So I'm hoping that, by the time we're doing this again next week, we're looking at a market that feels a little bit better.
Well, we had a cattle on feed report that came out last Friday, and there was a lot of anticipation going into this report, especially with what we dealt with in the report of the previous month. But this one just kind of seemed to be flat and boring compared to the excitement we saw in October.
And flat and boring is a lot better than that one in October, right?
Yeah.
I think that everyone was bearish for this report that we had last Friday since the report the month before that, where people were trying to understand and assimilate how you could have more cattle on feed, how you found those placements, blah, blah, blah. But being that you go back to that deal, I guess I'd give you just a little bit of more granular, as you know, I'm kind of a nerd when it comes to this sort of thing. So the placements came in at 104, which was the guess was 106. So that actually was a little bit friendly, even though it was 4% more than a year ago. Again, last year was the smallest ever. This one was either the second or the third smallest ever. In other words, so even though the placements were at 104 of a year ago, it was 6% less than the 5-year average. So, unless we all go off to our loading chute and jump off the end of it here, let's, I think the market kind of got that back into perspective a little bit and maybe appreciated it. I thought there was a couple of interesting little nuances about it, maybe too, Susan, in that Iowa's placements where I sit sharply down 17%. Some of the states that are more corporate feeders, shall we say, Colorado, Kansas, they were up sharply. So it looks like they're maybe getting a little bit back into the placement business. All in all, after this big of a break, I think it's important now with December trading at a record discount. Mm-hmm. Normally December is a premium to cash this time of year, right? Because we're anticipating less numbers, better demand. We're at a discount, not just a discount, but a record discount. I would like to think that maybe we could get our legs back underneath us here and see particularly the December, straighten out a little bit.
What about this cash market? Because as you put it to me, cash is not our friend right now. How can we get this friendship back on track?
Leverage. It's such a fine line. I sure think that's a big part of it, and I still believe, contrary to some others, that pardon me, that we are still quite current. I know in this area we are, and if I look at the grading, and I know some of that's because of some of the stuff that these guys feed in the south that's affected the grade. But if I saw a big increase in the amount of choice in prime, I'd be more worried because that would tell me that there's cattle more days on feed, yada yada. Average weights very similar to a year ago, trending higher like they always do this time of year. The weather's good. The cattle are growing 4 pounds a day, 2 pounds at night, because the weather's good. But I really believe that the market's more current than everybody lets on. So what happens is the board has that collapse thing after the last report. People get scared. They go, I should have taken 188 last week, so I'm taking 185 this week because it's going to be 182 next week, and yada, yada, yada. And that's exactly what happened. So now we're sitting here going like, well, should I take the 177 or should I hold? So far, feels like maybe we're going to, there's been one regional that's been 179 here just in the last few minutes when we're taping this. There is a few cattle leaking at 177, but maybe we'll catch here now and see what's going to go from there.
And want to talk to you. You mentioned about this December contract. It's got some interesting layers to it, different than what we see in previous months.
Well, what's different this time, and I think that's actually impacted some of the fund roll that was more aggressive and more earlier, maybe is a better word. And it's because December options expire the first business Friday of the month. In other words, the December options will expire the first business Friday of December, which happens to be December 1. So you cannot have an earlier option expiration and the start of the delivery process, which is the following Monday, than you can this time. So I think that forced the hand on a lot of these index funds that move, and that maybe was, I get a lot of questions here. Why is the December so rotten this week? And I was asking that same question, particularly when you're at a discount like that. But I think that was part of it, Susan. And maybe as we get, into next week here, we'll see the market feeling just a little better about everything.
Well, one final question for you. Can we expect a quieter trade futures wise and obviously cash wise with the holiday on Thursday and a shortened trade day on Friday?
The old days when we had a pit, the good old days. Oh, do I miss those days? Yeah, the Friday after Thanksgiving was notoriously the most boring day of the year. Could even been, card playing and who knows what else already by 10 o'clock in the morning. Now, I'll probably be watching some of these, what the forward months do compared to the back months, different things like that. As we start to move into a different kind of seasonal type pattern, we'll see if the cash trade doesn't get done today. We might actually have these cattle buyers might have to work on a Friday. That'd be too bad, huh? And see if we can get some firmer cash cattle bids too. So.
All right. Well, we wish you and your family and all your folks there at the office an amazing Thanksgiving holiday, and we'll catch up with you next week.
Thank you, and to you as well. See ya.
Just a reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call on the Rural Radio Network.